So yesterday was April the 2nd, what Trump terms his Liberation Day, and he announced reciprocal tariffs that were shocking. It was worse than what the market expected, so the market is down significantly after hours. The Dow futures down 1.97%, S&P down 2.69%, Nasdaq futures down 3.19%. So yeah, I was dead wrong on this. I expected that the tariff announcement would be not as bad as what everyone expected, but it is worse. So that goes to show you how impossible it is to predict geopolitics with any kind of certainty. But is it as bad as the media makes it out to be? Maybe not, and I'll explain why in this video. Now, I think the media and most people expected at the most 10% or 15% more tariffs, but no, he went shock and awe. As you can see over here, he has imposed 34% tariffs on China, 20% on the EU, 46% on Vietnam, and so on and so forth. So it was really, really shocking. And of course, the market is freaking out, thinking that, okay, this is going to create a trade war, there's going to be retaliation, and the global growth is going to slow down, we're going to go into recession, market's going to crash, depression, we're going to all die. Okay? Well, maybe not. So let me give you my take. So in this video, I'll talk about a few things. Number one, why is he doing this? What is his intention? Is he really as crazy as what people say he is? Number two, how long could this high tariffs last? Could it derail the global economy? And number three, what is the smart thing to do as an investor? Is this the time to panic, or is it a great generational buying opportunity? So let's cover all these things. So the first question is, why is he doing this? Let's understand the intention. Now, there are two main intentions. The first intention that he has is to actually get his trading partners, the other countries, to lower their tariffs, to reduce their trade barriers so that it's a level playing field. So that would reduce the US trade deficit and of course improve the US economy over the long run, which makes a lot of sense. So you can see that in the first column over here, these are tariffs that are currently charged by other countries to the United States. And of course, Trump is saying this is so unfair. For decades, other countries have imposed tariffs on us, and that has caused a trade deficit. So it's really unfair. It's time that we impose reciprocal tariffs. That means for every 10% you impose on us, we'll impose another 10%, and so that's really fair. Now, bear in mind that these figures that you see are not actual tariffs that are imposed on the US by, say, China or the EU. These are implied tariffs, which they use a calculation. They take the trade deficit divided by the exports of the countries, and they factor in what they say is currency manipulation and trade barriers. So they have got this convoluted formula that says that China has been imposing implied tariffs of 67% on US goods. So what they are now saying is that it's only fair that we reciprocate, that we are now imposing an additional 34% tariffs on China, and so forth. So again, they are saying that the EU has implied tariffs of 39% on the United States. So we're being very nice. We're only reciprocating 20% on the EU. So that's how they came up with all these figures. So is it the White House intention to keep these additional tariffs at such a high level for an extended period of time? I don't think so. I think Trump is using this as a negotiation ploy, playing chicken with other countries, saying, see, if you do this to us, we'll do this back to you, so you better lower or cut your tariffs. That's his game. So why do I think so? Well, if you read the White House tariff statement that you can read online, there are a few interesting things. Well, first of all, let me tell you the good news. All these tariffs do not include copper, pharmaceuticals, semiconductors, lumber, critical minerals, and energy products. So for those of you who are worried that this is going to affect your TSMC or Nvidia, AMD, pharmaceuticals, don't worry, they are all exempted from the tariffs. So that's the good thing, right? Now, for the other stuff, what is interesting is that the US is now imposing a base rate, a base 10% tariff rate on all countries that will start on the 5th of April, which is 3 days from now. Now, those additional higher tariffs, which are based on the reciprocation, right? Whatever you impose on us, we're going to impose it back on you. That will only come about on the 9th of April. And here's an interesting thing. If you read the White House statement, what Trump said is that should any trading partner take significant steps to remedy non-reciprocal trade arrangements and align sufficiently with the US on economic and national security matters, I may further modify to decrease or limit in scope the duties imposed under this order. So essentially what Trump is doing is he's saying, okay, you have got till the 9th of April to reduce your tariffs, to stop your currency manipulation, to reduce your barriers, and then I will reduce my tariffs. So like I said, that is the main intention. It's a negotiation strategy. Now, then the next question would be, would the other countries negotiate, right? Would they lower their tariffs? Will they lower their barriers so that everything comes down and in the end, trade becomes even better for the US and the US dollar grows stronger, the economy becomes stronger? That's a good question. So now, so far, some countries have responded on what they want to do and some have not responded. So I've created this chart to kind of like summarize. Now think about it. So who are the main trading partners of the US? Who will be the most affected by these tariffs? Number one, Mexico. Number two, China. Number three, Canada. And then the EU, led by Germany, Japan, Korea, and so on and so forth. Now, if you think about it, for these countries, there are three things they could do. Number one, they could negotiate and say, okay, fine, we will lower our tariffs, we'll get rid of our tariffs, and then the US will say, okay, then they lower theirs, and then everyone is happy, right? They could negotiate. The second thing these countries could do is to just not do anything and live with the higher tariffs. Okay, just tariff me, right? We'll all die together, okay? The third is they could retaliate. You bastard, we're gonna increase our tariffs even more. And Trump said, if you increase it even more, we will increase even more, and that will be a disaster. So it's either negotiate, do nothing, or retaliate. So what are they doing? So far, Mexico is already negotiating. So great. China has not yet responded. They're still thinking about it. So that's a big question mark. Canada, just like Mexico, already negotiating. Now, the only countries that are saying they're going to retaliate would be the EU, specifically Germany and France. So they are in Singlish, we say they're the most guailan, all right? They say, okay, we are not going to stand for it, we're going to retaliate, right? So that's the main contention. Japan already negotiating, Korea negotiating, India already negotiating, UK said okay, negotiating. Yeah, so the rest of the countries have not responded. So the only issue is the EU, and China is still a question mark on that. Now, if you ask me, if the majority of the trading partners all negotiate and they all reduce their tariffs or get rid of their tariffs, and the US does that, and it's only the EU that's fighting the US, how long are they going to go on for? I don't think very long, right? So I think in a couple of months, everything is going to be resolved and these tariffs will not remain at these high levels or may not even get there on the 9th of April. In the meantime, in the short term, in the next few months, could the markets go lower? Absolutely yes. You could see tremendous volatility in the markets. You may have some very good companies that are going to drop a lot more. Again, I can't predict for sure, okay? Or you never know, before the market opens today, maybe the market may reverse up, realizing that this is going to be some short-term issue. You can't predict for sure. Now, the question is, if the market continues going down in the short term, there's a lot of volatility, is that good or bad for investors? Well, it depends. If you are a very short-term trader, you've got a short-term time horizon, or you're very highly leveraged in the markets, you could be screwed. You'd be totally screwed, all right? But if you are someone who takes a longer term horizon, where you're looking 6 months from now, 1 year from now, 3 years from now, you should have zero worries. And you should see this as a fantastic opportunity. Why? Because at times of uncertainty, you will have some, again, very great businesses that would sell at ridiculous prices. They will sell at 20, 30% discounts simply because of panic as well as forced selling by brokers on traders who are on high margin. They force them to sell, creating the market to plunge even more, created by high frequency algos that are shorting the market. Remember, 70% of buying and selling in the market today are not by human beings, they are by high frequency algos, algorithmic trading robots. And these robots buy and sell in seconds with no regard to the value of the underlying business. They purely buy and sell based on the price action of the market. And of course, you've got market makers who are manipulating markets all the time, causing this tremendous volatility. So you can either get screwed by the market, like most people do, or you can take advantage of this. So for me, I'm going to take advantage of it. Now, before you panic, like I know some of you are holding on to stocks and you see some of your stocks may go down 10, 20, 30%. That's possible. Always remember this. When you own a stock, it's not a lottery ticket. You're owning a piece of a business. So the very important question to ask yourself is this. Is the underlying business going to actually be directly affected by these tariffs? Are their revenues and profits going to plunge? And I can tell you that for most businesses that I own, I'm not sure about you, but most businesses that I own, they are not directly affected by the tariffs at all. Yes, they could be indirectly affected. Of course, if the whole world goes into a slowdown, everything gets affected, right? But most of the companies that I own, which is the high quality, the top 1% of stocks in the world that my students buy together with me, most of them are not affected directly by these tariffs. And if their share price goes down, it's purely based on short-term, again, panic or manipulation. And that's always a great opportunity to buy great companies at a discount. So let me show you what I mean. So if you take a look at the US market, for example, they're altogether 11 sectors. You've got the energy sector, materials, which are commodities, industrials, consumer discretionary, consumer staples, healthcare, financials, technology, communication services, utilities, and real estate. Now, if you have taken my investing courses or you are in my community, you know that I only invest in mainly consumer discretionary, technology, and communication services, and financials, and healthcare, and a bit into consumer staples. I avoid energy stocks, I avoid material stocks, utilities I don't really buy, and I don't touch real estate as well, except for REITs. But REITs are a separate story because REITs are owning the real estate and not into property development or construction, which are very cyclical, which I basically avoid, right? Industrials I don't normally buy. In fact, I've only got one industrial stock, which is Pool Corporation, which interestingly, Buffett bought a lot of it after I bought it. Maybe he was secretly watching my videos. I'm just kidding, right? Yeah, so anyway, I've got very small exposure to industrials. So if you take a look at most of the stocks that I own within these categories, are they actually directly affected by tariffs? Most of them are not. So which sectors and industries will be affected by tariffs? Let's take a look. First, the material sector. Now, as you guys know, I mentioned earlier on, copper is exempted from the tariffs, but steel is not exempted. So steel, aluminum, and chemicals, these would be affected. So if you own companies which are in these industries, then you may see an actual effect on their revenues and their profits. But again, even if you have these companies, is it the end of the world? No, because again, these are all short-term. Eventually, it's going to be sorted out. Eventually, they're going to rebound back in terms of their revenue and profits, right? Second are industrial companies. So especially in the machinery industry and transportation and logistics, these could be affected. And again, you can read, these are the anticipated effects and the primary tariff-related drivers. Could real estate be affected? Well, some parts of real estate. Residential construction possible. Why? Because of the import of raw materials. Now, lumber is exempted from tariffs, but steel and other material costs could rise. So, like I said, part of it. Next, consumer discretionary. So, consumer discretionary, specific parts of it will be affected. Apparel and textile, autos, and furniture. So among consumer discretionary, I've got quite a number of stocks, but the only one that I can see to be directly affected would be Nike. And I've got a very small position. It's kind of like only 1% of the portfolio. So not too concerned about that. Next will be consumer staples, which are food products. Risk of retaliatory tariffs on exports and higher equipment costs. So their input costs, like for example, for Hershey's, it is cocoa. For Pepsi, it's sugar. and aluminum for the cans and stuff like that, right? So that could increase their input cost. But the question is, do they have pricing power? If they have pricing power, they're able to raise prices to pass the cost on to the consumer without affecting the demand very much, then they will not be as affected. So my guess is that Hershey's could be affected in the short term. PepsiCo may be a bit as well. All right. Finally, Apple. So only the electronics part of technology companies will be affected, not including semiconductors, because semiconductors, remember, are exempted. So the only company I own that is exposed to electronics is Apple. But then again, Apple may also not be that affected because Apple has a very strong brand, especially in the US. They've got pricing power. So even if their input material costs go up, they can raise prices to pass on the cost to the consumer and maintain their profit margins. And don't forget, for Apple, if I'm not wrong, close to 30 or 35% of their revenue are from services, recurring services from their iCloud subscription and all that. So that is not affected by tariffs. So in a nutshell, for the majority of companies that I own, I've got not much worries because most of them are not directly affected by tariffs. And yes, but they could be affected by a global slowdown if these tariff rates remain very high. But I don't think they're going to remain high for very long, or they may not even be imposed on the 9th of April. Because remember, the art of the deal, a lot of these super high tariffs he's showing right now is a negotiation strategy. It's like bargaining in some countries. I remember the first time I went to Phuket, I think it was many years ago, or even China at the time, and I went to the markets. I was going to buy things, and whatever they quoted, the local there said to me, "You got to chop it by 70%." I said, "What? Won't they get insulted? Chop by 70%?" They say, "No, that's how we do it. You chop by 70% and you negotiate from there." So for example, if I ask, how much is this bag? And this guy says, 100 baht or $100, whatever it is, you say, "No, 30, right? You chop by 70% and he goes, "Well, how about 50, right?" And then you negotiate from there. And that's probably the game he's playing. Of course, it's a game of chicken. He's playing chicken with the other countries, playing chicken with the rest of the world. But I think most of them will blink. And again, most of them have blinked. Japan has blinked, UK has blinked, Mexico, Canada have all blinked. The only one that's not blinking, who's like staring, is the EU, who probably wants to fight back. China, I'm not sure. China, they're pretty pragmatic. They may probably do a deal eventually, all right? So that's the first intention. Now, the second intention that the White House probably has is to lower the 10-year Treasury bond yield, to lower borrowing costs, to lower interest rates, if you will. And it's working. It's actually working. You can see that the 10-year Treasury yield has actually fallen on the news, and it's now down to 4.06%. So silver lining, what's the silver lining when long-term interest rates go down? Yeah, borrowing costs go down, and specific assets like REITs will do really well, right? So the good thing is my dividend portfolio, which mainly comprised of Singapore-listed REITs, it is up tremendously today. Okay, so I always say that, every dog has its day. I remember last year or last 2 years when interest rates were going up like crazy, my REITs were dropping, right? My REIT price was dropping, but I was still getting the dividends. And now that rates are coming down, the REITs are going up. So that's the importance again of having a well-diversified portfolio. You have a diversified portfolio across different sectors, whether it's technology, financials, healthcare, consumer staples, and you are well-balanced between growth stocks as well as defensive stocks, whether it's stocks for capital gains, stocks for dividends, and for REITs. Because when you've got a balanced portfolio, then your portfolio will continue to grow under any kind of economic situation, whether high interest rates, low interest rates, high inflation, low inflation, economic growth, or even a short-term recession, you can still grow your wealth. Remember, no crisis lasts forever. In a couple of months, you probably forget that this crisis even existed. And in the words of Winston Churchill, never let a good crisis go to waste. Take advantage of it. I know I am tonight. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com, we're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.